Everybody, happy Wednesday. Thanks for everybody dropping by on a Wednesday rather than the typical Thursday when we're doing it. Just because I got travel tomorrow and I'm gonna be on the way to the airport, so we'll do it on Wednesday instead of Thursday. Hopefully we'll get back to our kind of every other Thursday schedule as we have the opportunity. My name is Josh Schuler. I'm part of the Market Profile Trading Academy. I'm a licensed commodity broker. I am an independent futures trader, and welcome to the webinar. So this is going to be a shorter webinar, I think, than typical, but what I wanted to do is walk you through really around how do you build a trade, what is a trading system, how do you build a trading system, and more importantly, how do you build one that is unique to you. So if you've not been part of these before, here's the rundown, is that I will kind of walk through some concepts on the front end, and as you have questions, feel free to throw them in the question box, because we typically spend about half of our time just answering questions and seeing how I can help you. This is a way for me to give back and to give some access, hence the fact that I only do it every other week. I can commit to doing it this way, and I know that just from my own experience, trading is difficult. It's hard. It's not easy, and we all need a little bit of help. And so this is a way to get some access, and maybe there's something that you're working on or trying to figure out. And if I can help you take a step in that direction, that would be really great. Today, again, we're talking about trading systems and how to build one unique for you. This is actually part of an upcoming workshop that my partner Matt and I are launching in September. And the idea around this workshop is really, I've been in markets now for 9 years and have been working with people who are trying to gain competency in markets for about 4 years. And what I have found over and over again is, one, people who spend way too much time trying to gain proficiency in market. And but I mean by market, I mean time, I mean years. They may spend 10 years, 8 years trying to get to a place where they're actually taking money out of the market. And that is, a decade's a long time to be trying to figure out this game. And many people don't last that long. They either give up on any kind of intentional approach to markets, or they just give up altogether. And my MO and part of this workshop is that I'm kind of tired of watching people flounder and spend lots of time and money primarily in just giving money back to the market, trying to figure this out. And I think after having been working with people and working on performance and trying to accelerate them, I think we can get that down to really 3 sessions. We're going to do this workshop, this quick launch workshop has 3 sessions that each session is 1 day. They're spread across 3 months. And so this is just kind of a preview of the first session, which we're going to host September 21st, which is the next FOMC meeting. Because just as a rule, Matt and I don't trade on FOMC day. That's kind of a day we take off. So it's a good day to work on other things. So this is just going to be the content around that, give you some high-level concepts, obviously, because we're only going to be talking here for about 35-40 minutes, and the workshop itself is an all-day affair where we'll go down into depth and give some clear examples. So as we get into this today, again, if you have any questions, feel free to throw them in the question box, and I will answer every single one of them so far as we have time within up to the hour. And hopefully you find this to be of some value to you. So with that, let's rock and roll. Has been the custom in any time that I do one of these webinars, I want to reiterate a concept that I have about an approach for market. This is more just so that you understand my bias than it is anything else. That when I think about the markets and my approach to markets, I think about it as a business. And when I think about businesses who do well, the businesses who do well do so because they can see an opportunity and capitalize on it before the opportunity is gone. So by the time the trend is developed, it's too late. And now here's the problem. Everybody can identify the trend. If I pull up a price chart, if I look at a housing market chart, if I look at GDP growth or whatever, everybody can identify a trend. What people can't see is the opportunity. But that's the opportunity before it becomes a trend, that's where the real opportunity is. And many don't see that, but yet that's the thing that we're trying to look for. So and when I think about my approach to markets, I'm trying to identify that before it happens and not necessarily in the trend. So that's just an overall bias. Now specifically is think about a system. So here's the concept, another concept that I have around trading systems, is that there are no one-size-fits-all trading systems. Now, this is not what you find in the market. And what I mean the market is if you go Google, you learn how to trade, or just you will find and be inundated with all kinds of systems around approaching markets that assume that, hey, if I just buy this one thing, it will fit me, even though I'm a unique individual and I have unique strengths and unique weaknesses, and I have a unique amount of capital and I have a unique amount of time. The assumption is, oh, well, if you just follow the system, you'll do fine. And I just found that that's not true. I mean, even in my own system, as I talk about, and we'll define what we mean by system. As I've shared that with people, I have found that I can give you everything that I do, and you still won't be successful. But if I can help you create your own and build it around you and who you uniquely are, the success is far greater. So there are no one-size-fits-all systems. So now, as you're thinking about systems and trying to build one, here are some concepts for you to consider as you go about building that. And feel free to take some notes on these, and if you have questions around these specifically, we can go after them. But here are some things to think about as you're building your system and tailoring it to yourself. One is, what time frame am I going to operate in? And what I mean by what time frame am I going to operate in, I'm saying, well, what am I going to try to take a trade and be active in markets every day, inside the day? Like I want to be in and out in the same day. Or do I want to kind of look and place a trade every so often throughout the week or the month or a couple times a year? On average, the average investor, even a brokerage account, I think places about 20 trades a year. So, is that going to be the pace that you're going to be operating on, or is it going to be something far different? There are different systems and approaches for those different time frames. So that's one of those. You just have to decide for yourself, which would you like to be in, and where do you want to see opportunity? Do you want to see opportunity in a really long term, or do you want to see it in a shorter term? That will be important. Second is, do you have another job, or are there distractions around you as you think about your system? If you can't be focused on the markets, and you want to be an intraday trader, then you're going to have trouble being successful, because if you may be in a cube farm somewhere, and you're trying to place trades, and somebody's asking you about something that you're actually getting paid for, dependably, and you're distracted, and that causes your trade performance to go down. So I mean, that's something to consider as you think about your system. It also influences the time frame. Are there other things? If you can have a situation where you have another job that allows you to get income while you're growing your account trading, then that can be very advantageous, because that allows you to scale up your capital and in some sense give you a raise later on, because you're not just having to take a draw on whatever you make and just repeating that. And that's tied to another thing, which is how much capital do I have? So how much capital you have to trade with will impact how you put together your system, whether you're going to be trading with $2,000 or $2 million. Wherever you are in that spectrum impacts what products you're going to trade and what time frames are available to you, and whether this can be your full-time gig or not. So that's something to consider. Finally, what are your trading goals? What do you ultimately want out of trading? And then how well do you know yourself? And in somewhat sense, these are tied to each other. One, around the trading goals. I mean, I talk to traders who want to be professional traders. I talk to traders who just want something to do, whether they've been successful in another business or they are retired and they just want to get a better yield than what they could get through traditional retirement outlays. They may have an annuity, but they have a set of cash that they can control, that they want to do some growth out of it. Maybe somebody has been successful, they want a new challenge. That's a thing. So what are your goals? What are you trying to do? That will impact how you build your system. And tied to that, the how well do I know myself This is crucial because if I have this perspective that, oh yeah, I'm going to go be a pro trader and I'm going to kill it. So one, the probabilities are not with you. You're going to be an outlier. That would be like saying, hey, I'm going to go be a professional baseball player, and of all the kids who have played up through the ranks that eventually funnel up into the big leagues, I mean, it's 1-2%, if that, of everybody who funnels up through that actually gets there. So knowing yourself and what you're capable of, thinking that you're like, oh yeah, I have the resilience and the time and the dedication to get this thing to the place that works, and in reality you don't. You're kind of one of these people that's like a fly by your seats, flavor of the month. You'll work on trading for a little bit, and if it's working for you, great. And if you're having trouble, you'll just go on to do something else, or you'll keep shifting from one thing to another in the relentless search of something that works, and that's not going to work. So knowing yourself is crucial as you're building your system. So now let's define actually what do we mean by when I say trading system. So when I think about a trading system, I think it is the summation of all the technology, theory, context, background, and assumptions that any trader brings to whatever market he or she attempts to trade. So it is often presented as, oh, by my indicators, and these indicators are just graphical alerts, graphical depictions of potential opportunity based on someone else's system, and nothing else. They're separated from, okay, what do I actually think is going on in markets? What are my assumptions? How am I whom as a person? It's distracted from all that, which is why they don't work. When you're building your system, you have to think about you, and you have to know yourself really well. And I've heard it said, I think it's a very insightful idea, is that trading is the great revealer of who you are. So if you don't want to get to know yourself, don't trade, because it's going to absolutely teach you about yourself, and in some sense, lots of ugly ways at times. So it is the culmination when you talk about your system. It's the culmination of it, all of it. How do you think markets fundamentally work? How are you going to see context around the market? Your personal background. What do you have in terms of performance statistics? What have you had in past success? What assumptions are you overlaying it? How will you see those? And that's all wrapped up into a trading system. It is not an out-of-the-box system of indicators, approaches, alerts that you follow blindly and expect positive results. It's not that. This doesn't work. And if nothing else, if you can walk away from this webinar, please save yourself some time and don't go buy these things thinking, oh, that, and I know the marketing can be really slick, but they're just in a vacuum and they are not going to work. And even if there's some validity behind the logic of the system or the indicators or the things that you get out of the box, because the system includes other things like your perspective, how you know yourself, your goals, assumption, all that kind of stuff, it's not a complete system. So you're going to lower the probability of success. What a good system does, however, is it does help you identify market opportunities and corresponding risk so that you can execute entry and manage it into completion. This is what a good system does. So think about, if I have a perspective and theory that I'm bringing to the market, I am arranging the things that I see and how I'm viewing the market in such a way that the opportunities present can be expressed, and I have the opportunity to execute on those once in those and looking for those opportunities, because not every trade is going to win. How do I either manage it to completion, whether it's a win or a loss? So that is what a good trading system does. It helps you identify those opportunities, and such that you can execute those and do that consistently and over again. And to that end, I think that the best trading systems are those custom fit to the individual trader for all the reasons mentioned before. Your unique background, your perspective, how you want to participate in markets, what's your time frame, what's your capital, how do you even perceive what's going on in the market altogether. So with that kind of summary around what a trading system is, what are some things that you need to consider as you're building your system? Here's the first thing. One is to begin with a perspective of what's going on Who are the players and what they are trying to do, which is, in a sense, market context. And I'll give you a concrete example. So for myself and the nomenclature of our academy, I use market profile and volume profile as tools that allow me to see behavior that I believe is present in the market. And the behavior that I believe is present in the market is I believe that the market is an auction. So just in all the other places in my life where I see auction behavior, whether it's a housing market or an art market or a livestock market or a real or a estate auction, anytime I see auction behavior where there's a bid and an offer around something that has a perceived value, I know that there's consistent and predictable behaviors around that. And when I'm looking at a chart on some type of platform, all I'm seeing is a graphical representation of that market behavior, of that auction behavior. That, for me, in building my system is extremely helpful, and that informs all the other parts of my system in terms of how do I execute with capital, what is an opportunity, what's not an opportunity. For example, for me, real quick example of what is an opportunity, what's not, is if I see something distended from what I perceive to be of value, I pay a notice. Here's a very real example. This is crude oil futures, and today we had an inventory report early in the day, and then we had a spike low. At this is a market profile chart, so you can see each one of these letters. You might recognize this a little bit better if I expand this. These are 30-minute sessions. This is the high and low of that 30-minute session. So you can see there was one 30-minute session where we moved a lot of price, and in one 30-minute session, ending the day down here. So now I'm looking at this and I'm seeing lots of price movement, and there was accepted value above. Now we're very far below that, and for me that's a clue that there is an opportunity there. And I, based on my system, how do I execute against that opportunity or leverage that opportunity is based on how I see the markets. So context is crucial. Next, unless you understand what an indicator or tool is presenting to you and also understand the meaning of what is presented, please don't add indicators. And what I mean by this is, say for example, you're using Investor RT is a fantastic charting and analytical research platform. It has hundreds of indicators that display data in a myriad of ways. And unless you understand what exactly you're trying to see by that indicator, you're flying blind. You could say, oh yeah, another often used one is something called a MACD, which is a moving average convergence divergence. So it looks at price and it simply says over a certain fixed period of time, if I look at the moving averages based on like a 5-day or a 20-day, how far away are those moving averages? How close are they? And that tool can show me a behavior. And it's a behavior that some people lean on, and they use that to execute trades or see opportunity. So, but unless you understand what the tool is actually showing you and whether that even has any validity or not, it won't serve you. For example, for me, I'm not a price action trader, meaning that you'll find some traders that spend time looking at a candlestick chart and they will say, oh, based on how big this, give you an example of a candlestick chart. So let's go look at Apple. Okay, here's a candlestick chart. So it's got a each candle is for a specific day, and they call it a candle because it has a little wick. And that's the range of the day, and the top is an open, the bottom's a close. A wick could represent a price extreme. And people who look at just these formations make trading decisions off of them. I will tell you that I don't, because of my approach to market, I don't think that they're necessarily valid. For example, here's one where you have this extended wick back in June, and you had an extreme price. Someone may look up this price up here and go, oh man, 101, I think that's about where it is. That was really significant. Well, but we didn't do any other business at 101. So in my context, which I bring into my system, 101 is not valid. So I don't need to pay any attention to that as part of my system. So there are lots of ways that you can approach markets and organize the data. And what you're trying to do is you're trying to organize the data to support the pretext of which you come to the market. So if you don't know how markets operate, and I would suggest even if you don't understand that markets are an auction, then you're going to have trouble, because it's just going to be this guy's indicator versus another indicator, and you're going to go back. I often see traders who will try to back test specific indicators to try to get a system that works really well, and the reality is that they all work and then they don't work. So there will be fixed periods of times when it will work, and you'll be like, oh, this is awesome, and then there'll be periods of time when it doesn't work, and then you're hosed. So having a context that works really in any environment, I think, is key. And then that allows you to start adding, once you kind of know what you're wanting to look for, it starts adding layers of value. So, for example, for me, I try to keep my system as absolutely simple as possible. I want to see as little on the chart as I possibly can. Going back to this platform, there are very simple things that it's showing me about time and price and volume at a price, which are important to me. One of the things I'm adding to my system and refining is what kind of probability models can I get. And there's probabilities that I can get out of options markets that allow me to say, okay, I can see where price is, but what's the probability of us being at that price 30 days from now, 40 days from now, 50 days from now? There is tools that are out there that allow me to see the probabilities of that. Now, it doesn't mean we hit those, but if there's a 70% chance that we could hit a price at some point in the future, I can use that. That's useful information for me as I'm looking at an auction. So that's where, once I understand what I'm looking for, I can add or subtract, remove pieces to my system to really hone in on what I want to see. Oh, and particularly help me from style drift. Style drift is a consistent behavior that I see among people who are wanting to operate in markets where they have something that works for a little bit, and then they go through a period where stuff doesn't work, and so they start to question their system. And so they start going out just blindly looking for anything that they think will give them an edge. And they cobble on, this indicator and that indicator. And I say this, I know this because this is what I did for years. Is oh, well, it's not working right now, so there must be something I'm missing. So then I go try to find something else. And all I'm really doing is I'm just drifting style. So I'm not, that new thing I'll add, it'll work for a little bit, and then it won't work again. So if you keep your system simple and you have a belief in the pretext about what a market is and how it operates and who the players are, then you can arrange the data in such a way that it helps you see what you're actually looking to see. And then as you see tools, you're just supplementing the system and the style that you already have, not drifting a style in the relentless search for performance. Here are some components that make up your trading system. In our workshop, we go through all of these, but first and foremost, your philosophy of markets. For me, my philosophy is that it's an auction, and it behaves like any other auction that I've ever seen. So if I see price going up, my thing that I'm looking for is I'm looking for continued participation in higher prices. If we stop getting participation at higher prices, then I go, okay, what's got to happen? Either we've got to depreciate to bring in more buying activity, or there's going to be somebody else who's going to step in who believes that thing's still undervalued and they're going to take it higher. And that's a behavior that I'm looking at. Other components are the brokerage, so who's going to help clear your trades, and that is largely informed by what products do you want to trade. You want to trade equities, stocks, options, you want to trade futures and options on futures, you want to trade Forex. What are the tools that you want to trade, the products you want to trade, and that informs what brokerages that you go get through. the software, whether it's analytical software, where it's trade education software or execution software. There's a lot of software that's part of the system. Your own market analysis, so the homework that you do every day is part of your system. I actually have a system of homework that I do every day where I spend time kind of going back and reviewing the day's plan and putting, or what I thought would happen and what the plan was, and lots of other tools that help me understand it's the same thing every day. Do it absolutely every day. That helps me analyze the market and have a plan coming in each day. Hardware is part of your system. Your trading plan, which I just showed you. Risk definitions. So, for a given product, how much risk am I willing to assume to take this trade? Is that preset, or am I just going to go on some degree of emotion? An anchor trade, and what an anchor trade is it is a specific setup or product that you have honed competence around and that you can deliver consistent positive results. I cannot stress this one enough. If you want to trade, find a specific product, trade it 100 times and just track the performance. Get whatever information you can find about that product and those trades, jot those down in a journal. If you want something a little more robust, go grab Trader's spreadsheet journal and track your trades and get insight from trading that one product over and over and over and over again. If you can elicit positive results from one product, you'll be successful in adding others. This is also tied to style drift, where I see traders who will bounce around different products thinking, oh, well, I'm not good at that product, so I'm going to go to the next one. No, actually, if you just stay disciplined and focus on one product, you'll get there. You just have to be resilient enough to stick with that one product. And finally, capital. I mean, how much do you have to trade with? Are you constrained? Are you undercapitalized? Or do you have healthy capitalization that allows you to maneuver and focus on markets full time? So these are all components of the trading system. And as you can see, for each trader, they're unique. There's not a one-size-fits-all. I mean, I could give you my approach to all of these and my perspective on all of these, but it's not going to serve you. It's got to be uniquely yours, or else some of that stuff can just be noise that will cause you trouble. Some tools that you can use in the analysis portion of your trading system. Here are things to think about. These are some, in my sense, kind of gimmies. I would encourage you to incorporate them as part of your system, assuming that you understand what they're showing. One is profiling. This is looking at not just price, but how much time do we spend at a price, or how much volume do we execute at a price, as being a way to see really good support and resistance levels and specific behavior. Second are moving averages, whether it's a simple or an EMA. I look at these not because I really trade off of those, but because I know that people talk about them on financial networks, meaning that there's lots of people that look at those kind of things. And so if I know what the herd's looking at, then that's helpful to me. Second are oscillators. These are tools that describe the velocity at which price is moving. The RSI or an ADX, or that should be MACD. These are some very common oscillators. Again, they're part of my system. I don't lean heavily on them, but lots of people watch them. Fibs, or Fibonacci numbers. Every once in a while, you'll likely hear someone on Financial Network talk about Fibonacci numbers. Again, these are helpful tools to use. It's broadly used, and it is based on the assumption that, all of the world is mathematical. And there are fascinating insights and beauty found in math. And so Fibonacci numbers, go Google, or look at the Wikipedia page on Fibonacci numbers, and it will blow your mind away where Fibonacci shows up in creation. So looking at fibs, different types of charts. There are charts that show the candle charts, which is a fixed time session, and it shows an open, high, an extreme, and it paints the candle based on whether it was net buying or net selling. There are bars, like an open, high, low, close bar is the type of chart. A range chart, that basically says only paint a bar for every so many points, or if you're in futures, ticks or cents that this vehicle moves, or some degree of volume, like a tick chart, which would say, hey, for so many trades that take place in this instrument, then paint another candle. Those are different types of charts that are out there. So don't think that you have to use one. You can explore others and find out what works for you. On my own personal trigger charts, the charts that I use to trigger into a trade, I use tick charts, which are not time bound, but they are trade bound. So after so many trades take place in an instrument, it'll create a candle. Stats that I think you should consider having part of your system. One is what's called an average trading range. So knowing what is the average trading range of this vehicle. For example, the current average trading range for the NASDAQ futures, it's about 39 points. This is a number that fluctuates. In January, we were seeing days around 80 was the average. And so it changes with time. And knowing those statistics can help you in what you should expect in the coming day. Also, historical volatility and implied volatility are very powerful tools to incorporate into a system from the analytical side. One that I encourage you to look at is VWAP, which is a volume-weighted average price. The reason I would encourage you to take a look at VWAP is because all of the research that I'm doing around algorithms and system trading, they're looking at VWAP as part of their programming. So if you know the computers are looking at a VWAP, then you could benefit from looking at a VWAP. And then finally, probability tools such as option Greeks or Sigma or outliers. So knowing, is this move that I see in front of me in this product, significant, or is it just a run-of-the-mill average day to be expected? Knowing the difference between those two can be exceedingly helpful as you're thinking about your system. So that is a very, very high-level approach of all the stuff that we'll cover in our workshop. We'll spend time diving down into, okay, what are you trying to accomplish? What's the time frames that you're going to be in? How much capital do you have? Which products are attractive to you? What software do you have access to? Because there's some software that's very economical and available, and some software that's very powerful, but yet it's high price. So if you think about that as your business cost, thinking about yourself and what do you ultimately want out of your trading, and how are you going to approach the markets? What's fascinating is, I don't think there's a one-size-fits-all. I have my own opinions, but I know people whose systems look vastly different than mine, and they're very, very successful because they built systems that work for them. And so I think for anyone who wants to approach markets, having a system that's built around you is a great way to go. So any questions anybody has, go ahead and throw those in the question box, and I'll try to answer with as concrete specificity as I can. If you have any questions about my system and what it all consists of, I'm happy to answer those and kind of walk you through it. While anyone's looking at throwing in a question, I'll tell you, we do have our workshop coming up. Our first one is September 21st. I'm pretty excited about this thing because it's 3 sessions. The first session is wholly focused on building a reliable trading system that's unique to you. So sure, you'll get to see what I do and how I approach markets and how Matt, my partner, approaches markets, but we're really going to be focused on building a system around you and who you are uniquely. We have 2 other sessions that are part of the workshop. One is around having a reliable mental system, and the last is, how do you consistently identify opportunities? They are all interconnected, and they inform each other, but the cool thing is we structure it in such a way that all of these sessions stand alone. So if you want to just take session 2, you can take session 2. Or if you want to take session 2, which will be in October, because you can't do the session 1 one, you can take the next one you can take can be session 3, or you can skip around and do session 1 again. It doesn't matter which order you take them in. It's just we've ordered them in such a way that we're going to run these 4 times a year, and we're going to do basically each session once a quarter. So we'll do the 3 sessions each once a quarter, 4 times a year, all in the aims of hoping to help traders accelerate to decide, hey, is trading for me or is it not? If it is, let's get on with it and let's make it happen. And if it's not, then we know with clarity and we should go do something else. And that's okay too. If you ultimately are going to fail at trading and trading is not going to be for you, and you know that, and you need to go do something else to create value and have a challenge, go do that. That is a That is not a failure to discern that this is not something for you. It's a failure to keep going after it and assuming that someday you're going to figure it out, when in reality you're never going to stick with it long enough to make that happen. So, it's in your best interest, I think, to get there as quickly as possible. It's the idea of fail fast and pivot faster that entrepreneurs use all the time. You pursue an opportunity, you pursue an activity, and as soon as you find out that that's not going to pull, cut it. Move on to the next thing. But you want to do your due diligence. You don't want to just flippantly cut something. You actually want to go in, dive in, see what's really possible, give it a good solid go, and then decide if it has traction or not. If the workshop's too much for you, another thing that I would encourage you to do, if you at least get some help, is we have got a private Slack team that you're welcome to be part of. It's free, or just call us. Set up a time. We do really simple 30-minute free consults just to help people, relook at their system and say, here's some potential tweaks that you might be able to do. Again, that's, it's out of context of you can't cover everything in 30 minutes. So, but if I can give you 30 minutes, I'll do that. And that hopefully is helpful. So with that, I have covered everything I've covered. I don't see any questions, which means either I am brilliant or I have completely lost everybody. I hope that it is the former, not the latter. And if I don't see anything coming here in about 30 seconds, then I'm going to jump off. And everybody have an awesome Wednesday. Go check out the website, marketprofiletradingacademy.com. You can find stuff about the workshop. You can find out about our private Slack channel, and at the very least find some resources to help you just compare your own system against and say, hey, is this, this is working over here. Is this something that I can consider? Hopefully we can offer some pretext or some philosophy of market that could inform your system and get you the next way. Okay, so I'm going to jump off. Thanks everybody for sticking around, and go work on building your own system. Try to hone that system to where it works. Strip it down to its bare essentials first, get that working, and then build it up piece by piece till something that's uniquely you and that will deliver consistent performance. All right, thanks.